Hello all, Tony here. Well, following their reopening this morning, Nasdaq futures are trading down approximately 1.1% following President Trump's threat to impose a 10% tariff on imports from several European allies starting February the 1st unless the US is permitted to purchase Greenland. Now, while there are hopes the US administration may eventually de-escalate these threats, it is evident that securing Greenland remains a core national security objective for the current US administration. Beyond watching for headlines around this development, key events this week including the confirmation hearing for Fed Governor Lisa Cook. And on top of that, we're set to receive the Fed's preferred measure of inflation, the core PCE price index, along with flash PMI data and earnings reports from Netflix, J&J, Procter & Gamble, and Intel. Let's take a look at the charts of the Nasdaq and S&P 500 to see where they are as we start this crucial week. Right, so kicking off with the Nasdaq 100 cash chart. Now, into the final weeks of 2025, we maintained a bullish bias due to two reasons. The first one being that this pullback from the October highs appeared corrective into the November lows, and also due to that seasonal strength we see into the end of the year. Now, it played out reasonably well with the Nasdaq last week hitting its highest level since late October. However, what you can see here is that it failed to make a fresh record high. Now, if you look at the S&P and the Dow Jones, they both made fresh record highs. So we're seeing continued evidence of divergence between the three key US indices, which isn't always an encouraging sign. So what that means is we're now looking for levels which would either confirm that we can push up to make new highs or that we may have seen a failed fifth wave in Elliott wave framework. So looking and drilling down into this chart, we know that Nasdaq futures are trading down about 1.1%. So we'd be below this uptrend support when the Nasdaq futures are currently trading where they are, if it's replicated when the cash opens below later this week. So watching to see whether we break below this uptrend support, and then I'd want to see a break below the year-to-date lows coming in around 25,086. And that would increase confidence that potentially we do have a failed fifth in place and that a pullback somewhere into this area here, initially 24,500 is underway with scope back towards 24,000. Now, conversely, if futures rebound, the cash bounces off this uptrend support, then there's no reason why we can't continue to look for fresh record highs in the Nasdaq. But it is shaping as a very crucial opening start to this week because of these levels which I mentioned. Likewise for the S&P 500. Now, at this point of time, it's closed above this uptrend support. But if it was to break below, firstly, this 68.85 low from last week, and then below the year-to-date lows around 68.20-ish, you'd probably then say that the S&P completed a five-wave advance. Now, remember, this goes all the way back to the Liberation Day lows. This is your wave 3, your wave 4, and this would be your wave 5 if it was to break below this support area here. Conversely, as we said, S&P futures, Nasdaq futures are lower at this point of time, but it's not unusual for futures to sell off on a Monday only to rebound before the cash market opens. So we need to pay careful attention as to where the cash market opens. If it bounces off this uptrend support, then potentially we can push above 7,000. If it breaks below these levels we've highlighted, even the Nasdaq may be in a little bit of trouble. That's all for this market update. Stay tuned for more ahead.